Oh,
Like,
BlackRock's terrible. They're
right.
one of the worst players on Wall Street. They're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs. They own more. Their ETFs own more stocks than there are stocks.
Hey guys, welcome back to Everyday Finance. In this video, Max Keiser discuss about Bitcoin. According to Max Keiser, BlackRock is terrible. You are aware that they are among the worst players on Wall Street, has none morality at all. And their business strategy is simply repackaging stocks and offering them as exchange-traded funds, ETFs. You can be sure that they possess more stocks than are stocks in order. They simply ped there, and they take money for that, possess enormous political clout, which they exploit to their advantage in order to manipulate the system, and they truly a scourge on capitalism. But in this instance, they turn into a helpful idiot, as you may already be aware. Graham's claim that Bitcoin was actually the first significant financial aircraft in history that the general public could access Wall Street typically generates its revenue in this way first, and then they sell off small portions. The appropriate firms go public, and the insiders profit handsomely money, after which the general public is able to purchase shares in the aftermarket, at which point the feast has already taken place. They are able to purchase shares, but in this instance, the feast was hosted by the common people, by those who were only barely on the of society purchasing Bitcoin at $1, $5, and $10. And now that Wall Street is starting to enter at about 4,000, which is essentially the opposite of what has historically occurred with markets, the little business owner arrived first and amassed enormous wealth. And now Wall Street emerges and everyone will become extremely wealthy. So yes, BlackRock and all these other companies will introduce ETFs and lots of things Max Keiser discuss. So please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
Yeah, BlackRock and all these other firms, Fidelity, will launch ETFs, and it'll bring in a tremendous amount of capital. And the product itself, the Bitcoin ETF, is an inferior product to owning Bitcoin outright, just like the gold ETF is an inferior product owning the gold outright, because in the gold ETF, if there's a credit problem with the custodian bank and they go bankrupt for some reason, it says in the fine print that they can settle with you, the ETF owner, in cash. So you don't get gold for your gold ETF. You get paper money, which is the thing you're trying to avoid. Same thing with a Bitcoin ETF. It'll have contingencies in the prospectus that make it very much inferior to simply buying Bitcoin and putting it into cold storage and taking it out of the system. But nevertheless, it will unleash a lot of capital. And, we're going to get to a valuation of Bitcoin, which would be similar to gold. So gold is in the 10 trillion approximately market capitalization, the global gold stock that's traded. And Bitcoin is just under 1 trillion. So you're going to get a 10x on Bitcoin pretty quickly here. So you're talking 400,000 to compete with gold. I think we could get it on this move. You're going to get it definitely above 250,000 on this wave, on this move. Will we get to 400,000 on this without a correction? And Bitcoin corrects pretty severely every few years. Possibly. We'll have to see how it develops. But I have a feeling that because the fiat money world is collapsing so rapidly, and the model of the nation state itself is collapsing, that we could be pretty shocked on the upside in terms of where Bitcoin is going. In terms, the price of Bitcoin would go higher, right? If the dollar is going down, your dollar price in Bitcoin goes up. So we're very happy to see the dollar go down. Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. but eventually it too will go this way of all fiat money. So fiat money is we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States. So this is all winding down. We're moving toward a post fiat money, post central bank, post nation state world, and gold will have a place in that world. And countries like we said, China, Russia, and others are aggressively buying gold. Central banks still settle in gold, and gold will still be around, and it'll still have a bid, and people will still buy it, and it'll still be a safe haven play.
According to Max Keiser, the price of Bitcoin would increase in US dollars if the value of a dollar increases in Bitcoin when the value of the USD declines. Therefore, we Keiser glad to see the dollar decline. And Bitcoin is already reaching new records among the currencies that you're aware of the hyperinflation that is occurring in Turkey, Venezuela, and Argentina. You're aware that due of these locations' local currencies, Bitcoin is already reaching new all-time highs there when a dollar collapses. You can be sure it's the cleanest shirt in the laundry. Yes, it's a fiat currency. But in comparison to these other fiat currencies, it's not the worst choice. Fiat money is what we have, because someday it will also follow this path. Fiat money was essentially a 300-year experiment, and in 1971, you obviously wanted an all-fiat currency. This is all coming to an end since Nixon closed the gold window in the US, providing money for the entire world. Let's back to the Max Keiser interview.
But as Paul Tudor Jones has said, all the dynamics that go in, the macroeconomic dynamics that go into analyzing and projecting where the prices of these things are going, he likes inflation hedges. He says, yeah, gold, of course, is a classic inflation hedge, but Bitcoin is the fast horse in the race. And, I'm looking at the numbers here myself, and I'm figuring for every dollar move in gold up, you're going to get $30 to $40 in Bitcoin. So, it's a supercharged way to play the collapse of the fiat money world, which includes the dollar. The dollar is really in jeopardy. The country, the United States, is printing money just to pay the interest on the debt, just the interest, right? So that's debt monetization and a debt spiral. And the GDP is not going to suddenly go up 50x to create enough tax revenue to pay down that debt. That in fact the GDP is shrinking. The amount of the dynamics are horrible. For the fundamentals of the U.S. dollar are terrible, and everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world, and that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market, the global bond market. It's still incredibly cheap relative to what you could call the total addressable market, TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And that's it. Everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.
Max Keiser looking at Bitcoin, which is the fastest horse in the race. Max Keiser estimating that for every dollar that increases in gold, you'll receive between $30 and $40 in Bitcoin. So you can be sure it's an enhanced strategy to profit from the demise of fiat money. The world of money, which includes the dollar, you know that the currency is in danger, is, if you learn something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.